It is a bright, cheery morning on a Monday. It is May 12th. It is the day after Mother's Day. Hopefully, you had a nice Mother's Day here in the United States. Took your mom, took your wife, took whoever is a mom in your community out to a nice meal, or maybe you guys had a nice get together at home. I certainly did, had a nice weekend. What's even nicer is waking up on a Monday morning with the Nasdaq up 3.92%, the S&P up 3%. Man, talk about a giant present on a Monday morning. Wish every morning was like this, but boy, we'd all be billionaires very quickly. The market is ripping higher, and it'll be fun to watch this market open together on this live stream in about 29 minutes. Not all stocks are ripping higher. Some pharma stocks are getting hit because the government's announced that, hey, they're going to go after pharmaceutical companies and try to do some cost containment. So the number one suspect in that is Eli Lilly. It is getting hit this morning. So not all sectors are going up nicely. But hey, I'll take it. Be a nice day to look at some pharma stocks. It's a good day to buy stuff that nobody's thinking of. The other category is bonds. Bonds, interest rates have flown up, and the price of a bond today is going to be discounted, in my opinion. So I'm going to buy some bonds. It's not a good day to buy stocks unless you tried, you're going to be chasing quite a bit. And so I think it's going to be a low activity day for me. I'm probably going to buy some bonds. I'm going to see if I want to start a position in Novo Nordisk. I've been watching that stock. I like what I'm seeing. Really consistent company. And I might start doing that today because the healthcare stocks are getting hit. The pharmaceutical stocks are getting hit. Not a bad time to take a look. All right. So let's kind of take a quick look around and see what the market's doing. It is great to see Shadow Guy on the stream. Sergio, good morning. Thanks, guys, for the comments. Shadow Guy. Nice. Your mom's going to Costa Rica. Oh, she has a great time. I've never been to Costa Rica. I'm sure it's beautiful. Sergio, Pfizer's getting demolished. Oh, man. Pfizer's been a little bit of a letdown for me. It's too good of a morning to talk about too much about Pfizer. So if you wouldn't mind, I'm going to skip Pfizer today. I want to enjoy this. Genetic Smite, how you doing, man? Good to see you. Thanks for joining. All right, so I was curious to see what the heck's happening in Europe. So it looks like the market in Germany is up, and in England up, France up nicely. That looks good. Let's take a look at Asia. I wonder if the news got to them in time to see that Shanghai index go up. So this one, so this is Shanghai. It's up 0.82%. This one here is Hang Seng, Hong Kong. Okay, so Hong Kong's up 3%. Nice, beautiful. Japan's up. But Hong Kong's up, Shanghai's up. Sure, Hong Kong's like, cool. We got a 90-day relief on tariffs where those really high tariffs were pretty much postponed. They're going to try to work out a more longer-term deal. And in my observation, and it could be off a little bit, but not a lot, is we now have with this 90-day kind of, we're not going to have tariffs for 90 days period. We're going to get back to what we had before President Trump, and we're going to get back to kind of the previous expectation. So now we're going to have 90 days of that, plus they expect that they're going to have a longer term deal. So that's what's causing the market to go up. What it also may be is the companies that were waiting, like, hey, we don't want to buy any goods right now because these tariffs are too high. Maybe they get um, resolved. Well, they were right to wait. So now they're going to start ordering like crazy. They're going to start stocking the shelves for Christmas and all kinds of stuff. Because you think about Christmas orders, right? In the US, that Christmas period is usually a retail spike. Those companies are going to be ordering now and saying, hey, I want all this type of Christmas stuff in my catalog, and I need you to ship it to me in the month of September, October, so I can put it on the shelves in time for November, where you have Black Friday sales and everything has to be ready to go. And they don't want to wait till the last minute. So a lot of that ordering is going to happen now. So you're going to see very good volumes happening in Hong Kong, China. You're going to see a lot more activity happening. And I think that's going to be a positive for the quarter we're in, which officially is, I guess, the second calendar quarter. So that is happening. What's going on with crypto? Crypto is doing great, $104 per coin. At my Mother's Day get together, there's my niece is married to a bright person, this guy, and he's more into real estate, and he's an absolutely crypto non-believer. And we talked about Bitcoin. He had a lot of questions around Bitcoin, so I kind of felt good that I was informed, if anything, and could explain to him why Bitcoin, why it's at $104 a coin. And it was a pretty cool conversation. I don't know that I moved him from complete non-believer in crypto to, well, maybe it does have some merit. I think I made a little bit of a move on him, and we'll see. Maybe he'll become another crypto investor at some point, but that doesn't need to happen. He's a solid guy. He makes money on real estate. All right, so that's what's going on market wide. Let's get back to the US here. And all right, so that's gold is coming down. On the member call yesterday, we talked extensively about gold, looking at a gold miner. And I know, Shadow Guy, you were part of that conversation. This is the biggest, I would say, risk to that gold miner we were looking at is if gold starts heading down, gold miners are they're gonna have tough times, right? Because their revenues are pegged on this gold price, and it's been doing great. 1 year, from a year ago, a gold miner was making 38% less revenue for doing the same thing, having the same cost, having the same expenses. Just when they bring an ounce of gold out, it's worth more. Okay. Well, the opposite, if we have a period where, hey, things are getting resolved, risk is going down, investors would rather be in equities and really flourish. Okay, well, the gold price, if it drops, that gold miner is going to drop. So that investment is risky. That was the risk that I was talking about. That would worry me if we're dealing with a gold miner while gold prices are really high. So we're seeing that really move fast. Oil is up. Now, why is oil up? Because now that we got these tariffs somewhat contained, organized, in process to be fixed, the expectation is, okay, the economy is going to do better than expected because now people are going to get back into buying modes. Businesses are going to be into investing modes. Hey, there's just going to be more activity. Having said that, the expectation for oil consumption is higher, and now crude oil prices have moved up. That means that we're, Chevron, Exxon are going to have good days today, I imagine. And the oil explorers, Oxy and others, are going to have a good day. So we'll take a peek in about 20 minutes and see if that expectation is met on the oil price. So just a really interesting day across the board. When you have these extreme moves, it's very easy to explain, hey, this is what's going on. When you have these subtle moves, it's like, well, I'm not quite sure. It could be 10 things. So looks like Essex is great. Yeah. Thanks for tuning in from East London. And it's not in London, but man, Peaky Blinders is such a cool show. I watched watched that show religiously and loved it. Um, was it Thomas Shelby was the main character, and love that show. I'd love to go to London someday. I'd love to go to England someday. I was there for one day, and that's it. And really want to get back. So, thanks for tuning in, Shadow Guy. Yes, I agree. So, I think we're talking here about gold miners. We're talking about miners. So, and I agree with you that if that miner we were talking about also mined for copper, and copper, if anything, copper is going to be in higher demand, because if we have higher business activity buying electronics and all kinds of everything else, right? Building of infrastructure for electric power, the miner of copper is going to do well, because there's going to be demand, and the price of copper, I expect, it's going to go up. And that's why I like buying miners that focus on copper, because to me, that's really consistent. It's the demand on copper is just going to be high for the next, I don't know, 10, 20 years, maybe 40. And where gold is volatile at times. You see, we had this big drop. I think this happened in April. I wonder what the stock market. Let me compare it to the NASDAQ and see if we can see these two things kind of move in opposite directions. Now, at this point here, this is weird. We had a dropping NASDAQ and a dropping gold price. Now, that is not supposed to be that. It's supposed to be opposite. See how gold continued to go up while stocks went down. That's what we're supposed to see. We're supposed to see investors love stocks, so they're going to sell their gold. Okay, that's normal. Then they traded kind of together, but then here is where we saw, hey, investors are worried, so they're going to stay in the blue, gold. And I guess I should have picked the opposite colors, but here we are. So the blue is actually gold. It continued to go up while stocks really struggled. And now that stocks are moving up, gold is coming down. So the blue line is gold and stocks are going up. So that is interesting to observe. Very cool. All right. So I am going to stay in the US, kind of take a peek at the NASDAQ. So the NASDAQ year to date is 7%. And today we're going to have an update. So, man, we're moving to get back even on the year overall in the index for interesting. Yep. Chile, a lot of copper, and man, copper's so consistent. Chile has a bunch of minerals, and I think if you look at the geography of Chile, you have the Pacific plate, the tectonic shift, and I forgot which plate is going under the other, and it created the Andes Mountains, which is right there in Chile. It exposes a lot of the minerals that we want to make products. So yeah, they're from a minerals perspective, a very wealthy country. All right, so let's take a look at a couple of things. Year-to-date materials, we talked about miners and gold. It's number one for the year-to-date. And today we'll probably see some big moves in technology, probably see some moves in consumer discretionary now that, hey, tariffs are going to be moved out of the way. And I think consumer discretionary is going to do well. Communication services probably will do well. Industrials will do well today. Healthcare is getting hammered. It's probably going to do bad. Financials will do well. Staples will do poorly, because I think companies or investors are moving away from staples that they were going towards, that they wanted to seek for a little bit of safety while stocks are moving down. Utilities will probably sell off, and materials, I think they're going to do fine because I know that gold is going down, but if you have greater demand for products, you're going to have greater demand for copper and steel and aluminum and those types of materials. So I think materials are going to do fine today, but probably the big winner of the day will be consumer discretionary and technology. All right. So we have some earnings that came out today, and let me kind of go over a couple things. So if you're a member of the channel, you want me to look at the ticker. If you're a paid member, just put it in the chat. I'll get to it. We'll go over it. And if you're not, it's great that you're here. Thank you. If you'd like me to review a ticker, it's $5. It's just a way of supporting the channel, paying for all the costs that it costs to run a channel and so forth. So I'd appreciate your support on that. Looks like a comment came in on A-Lab. Interesting, yeah. So A-Lab, let's take a peek at A-Lab and see what's going on. A-Lab, geez, the market is this year just really high volatility. I think I hit the wrong ticker. And by the way, good morning, Mike. Hopefully you had a nice weekend. Yeah, look at that. Jeez. So A-Lab's supposed to open 13.9% higher. And we look at just the year to date, this thing's down 46%. But it doesn't kind of tell us the whole story. A-Lab is a semiconductor company. It's a smaller one. They're really high growth, just growing really, really fast. And if we look at the monthly from the recent low to where we're at today, from April 21st to May 9th, the stock's up 30%. And today it's going to be up 13.76. So, geez, we're going to be up 45% or so. And that is a big move. And Astera Labs is one that, when you have volatility is my friend. When you have a company do this, where it's like the market was really excited about their products, they're in the right space, they're in data center. I agree with the market. I just disagreed that, hey, a company that is this young, unproven, the market's just too excited about it. So then it sold off just drastically. The market was like crazy. Sold off 64%. That provided an opportunity. So I started buying. And from the recent low at $52 to now, we're up 34%. So it provided a nice opportunity. And I did pick up some A-Lab. It was a company that I felt like, wow, that's a pretty neat company. Their growth, can't find 240% growth easy, and profitable, free cash flow producing, in the right space. So I'm glad I picked some of it up. I didn't pick up a giant, position like, oh, I bought $100,000 of it. No, it's a smaller position, like 10,000, but it's a winner. It's still a winner, and it is a risky stock. It could have easily have gone down if we had these tariffs continue on, and maybe the government would have announced, hey, we're going to have greater restrictions on that data center. Maybe it could have gone down. But Astera continues, in my mind, to be an acquisition target because these guys are in the right place at the right time. NVIDIA, Broadcom, AMD, they're probably looking at this company going, we should acquire that business. They're really high growth. They're very strategic. They'd probably have to pay a handsome premium, like 70% premium or something, because the Astera management team would be like, no, we're heading up, man. We think our valuation is way up here. So, but we'll see what happens. For now, the stock's thriving, so I'll just enjoy the rise. So Astera Labs, go for it. All right. Shadow Guy. So you're looking at Zurich Insurance. Hold on a second. So you're you're interested in, you're going to buy some Zurn. What's going on in insurance today? So it's selling off a little bit. Yeah, it's not a bad day. So, it's always about not necessarily being a contrarian to a fault. It's just certain things today are going to be flying up. Consumer discretionary, some technology, just so I just stay out of the way. It's like there's no way I can buy stocks that are going up that fast. But certain other sectors, insurance looks to be one of the other sectors. Not a bad day to think about picking up some shares. It's kind of like buy when nobody's looking, when prices are down. So this stock here pays a handsome dividend, 4.82%. Market cap, 82 billion. Revenue, 62 billion. So really nice cost to sales ratio, less than 2. PE ratio looks good, 15.97. That looks really good. Forward PE, 15.64. Looks good. All right. So their revenues have been expanding. That looks good. Free cash flow, really nice expansion. Look at this cash flow. They went from being 4.5 billion in free cash flow in 22, and 2 years later, 7.2. That's a really nice growth. These guys are really, really doing well. 7.2, that growth rate. They're probably worth 15 times that free cash flow. That's 100 call it 107, 108 minus debt. Do they have any debt? They have a net cash surplus of 8 billion. So we're talking companies worth about 115 billion. Yeah, this thing's nicely discounted. High dividend, highly discounted, produces excessive cash. I'm seeing a lot of green flags on Zurich Insurance Group. Looks pretty darn good to me. And just out of curiosity, I wanted to see, what kind of insurance do they provide? You may know that already. So they do, the individual and company insurance policies. Do they do, do they insure homes? Do they insure businesses? Looks like they do some of both. Insurance companies are some of the smartest organizations out there. All organizations have smart people, but these guys, they hired like some of the best math people because they need actuarians to be able to put together the models where they sell insurance at a price that is more than what they're going to have to pay out. And it takes some heavy duty math for these actuarians to get it right. So it looks good, Shadow Guy. That's a pretty good move today. Good luck with that. All right, man, the chat is on fire. Let's see if I'm missing anything here. And then Mike, you're close to selling your MetLife. You're going to throw that into your cash pile. Well, I always have a soft spot in my heart for Met because they have Snoopy as their mascot, and I love Snoopy. Grew up watching Peanuts, and Snoopy's one of my favorites. But, I like money more than Snoopy. And good luck with your sale of MetLife. MetLife is solid. They, like Zurich, they're just a solid insurance company. They make money. They pay a dividend. Lots of green flags with MetLife as well. Good luck with that. All right. So looking at earnings, a company that announced was NRG Energy. And these guys, they provide energy for people's homes. They're a Texas company. They're independent power producer. And these guys have done well. This guy, look at this, 57% appreciation on a utility. Low dividend because the stock's moved up so much. And over the 5-year, holy smokes, this thing's done well. And today, look at that. It's up 13.86%. Wow, this thing's been a winner. And it looks like they are announcing an acquisition, and they're acquiring LS Power Portfolio. Looks like they're acquiring assets from another company just to make themselves bigger. Good for them. Now we have an administration in office that's going to allow acquisitions. The last administration, and I'm not going to, throw them under the bus, but I would just call out that they were anti-acquisitions. They were anti-mergers. They give companies a hard time. And I kind of felt like they got in the way of Kroger, and I think that was the bad thing. That was a bad thing for America. That was a bad thing for shoppers, in my opinion. So they actually hurt Kroger. They hurt Albertsons in that process. But now we have an administration that's probably going to be friendly to business, where it's like, hey, you think this acquisition is going to be good for the consumer? Explain why, and then let them do it. In general, I'm a believer that a thriving economic engine helps everybody. Helps the poor person that's trying to raise themselves up to a better economic level, because they can get jobs at these companies. It puts more tax revenue in the government's hands so they can help everybody. I'm just a believer that economic prosperity helps everybody. And when the government gets in the way of businesses acquiring other businesses, I think it's a bad idea in general. All right. So these guys are going to acquire another business. They also announced their earnings. And I don't know if that stock analysis. Yeah, they already loaded the numbers. Nice job, stock analysis. Look at that growth. 15.56%. No wonder the stock is flourishing today. Nicely done. This is an independent power producer. These guys are supposed to be generating the power that's going to be feed a lot of these data centers that need electricity. You can't run without electricity. So interesting that they grew that well. Nicely done. The other thing that we experienced in the first quarter was energy prices were down. And NRG, if they're producing power, that means their input cost, which is natural gas and other things, it was less expensive. So they probably made more money. So let's see if they did make more money. Let's take a look. All right. So earnings per share looks good. Free cash flow of 638 million. Okay. So the profit margin was okay, but it I don't see a big expansion. And I'm looking at the quarterly. But yeah, let me continue to look at the quarterly because I wanted to look at the quarter. Yeah, I expected it to jump a bit, but it didn't. Looks like the second quarter last year was a good one. Then they had a loss. So this business is working today. They are flying up 15% now. Jeez. Market is just going to thrive today. Now, when we look at these energy companies, utility companies, I would say that, I like how Warren Buffett says, you need to understand your sphere of competence. What companies can you understand really well? What companies make sense to you? Utilities don't make sense to me. So I got to be careful not to jump into something that just, doesn't make sense to me. And what's always not made sense to me is the amount of capital expense that has to be thrown into these companies. Just really high. That's what I don't like. And what's in a paradox about Warren Buffett, because he's awesome, he's a legend, is he owns utilities. But, he, in his last, the meeting he just had in Omaha, Nebraska, he clearly expressed, you want to find companies that don't have to deploy capital, that make a lot of money and a lot of free cash flow. That's what he said. That's the ultimate prize in a stock. Well, utility companies have to deploy a lot of capital. So it's one of those riddles that I can't solve when it comes to Berkshire. Is like these guys love utilities, but it goes against what Warren Buffett is saying investors ought to try to do. So, oh well, I don't understand it. I don't invest because of that line. I'd rather invest in Meta. They don't have to deploy a bunch of capital. They make a bunch of money, and their stock price keeps flourishing. I'll stay in my lane, continue to make money the way I make money. This stock, the market should be open now. Look at that, 12%. No, excuse me, 16%. I think you guys saw it switch on me here. I'm going to have to keep an eye on the market today because it's flying up. Man, hang on, everybody. Let me take another sip of coffee. I should have hit the espresso this morning because I'm going to need to keep up with a fast market. The other stock that announced today was Monday.com. These guys are a software company for small businesses, and they are interesting, but their fundamentals, I looked at them before we got on the live stream. I like their growth. They're doing well. They're small, but their growth is impressive. 30% in the quarter, 32%. If you look at the trailing 12 months, solid. They're a $1 billion revenue company, solid. They are making some money and some free cash flow. Very good. And look at that expansion of free cash flow. That's what we want to see. We want to see a business as they get bigger, they start really cranking out that cash. That cash is what I'm after. I want to see businesses that naturally create lots of cash, load up the balance sheet with cash, buy back shares, acquire other businesses, make themselves bigger, fund those projects that are going to be the next catalyst for growth for the company. So that cash has really been expanding. So that looks really good. But the stock is done well. The stock's done really well. Software companies have not done great, probably for the last year, but they're beginning to really work. This one's working 18% year to date. For the 1 year, 50%. This one is working just fine. Now, it did sell off back in 22 along with everybody else, but it's really been on an upward path. Nicely done. Selling off now, man. So this stock is okay, but I think that software businesses, they've been left behind, like from this whole data center build out. Semiconductor companies got super hot. Cybersecurity companies got super hot, and software's been left behind. And I actually really like the valuations of like Salesforce, Adobe, and I bought into those. I've got a 8-pack of software companies. I am not light on software. I love software companies. Reason I love them is they just make so much darn money. They make a lot of free cash flow. You look at their margins, beautiful margins. So Monday is having a little bit of an off day. What happened? Jeez, I thought all stocks were going up today. Let's take a look at the heat map, see if it's updated yet. Yeah, look at that. Whew. Man, Amazon. Woo-hoo. That is the reaction of an Amazon stockholder. And I love seeing 8.47 on a stock where I own a pretty good number of shares. Beautiful. My biggest stock, biggest holding is Meta. So beautiful. Google, Tesla, Nvidia, Broadcom, Apple. Yeah, Apple. Man, that tariff war could have really hurt Apple. So here's Salesforce. In healthcare, we talked about, but Eli Lilly's not getting hammered today. I thought they were going to get hammered today. Not the case. And as they bring down cost, it's going to make Elevance more profitable. Interesting. Okay. And Pfizer's up. What the heck's going on? Okay. you have certain expectations in the day, and very quickly you see some data that surprises you. Microsoft's not moving. Interesting. Yeah. I thought they'd be moving with its peers, but it's not moving yet. It has been having a decent year, so not going to get bent out of shape over that one. Okay, let's keep moving on some earnings. Let me double check to see. Sergio, Lyft is down, huh? I did a video on Lyft yesterday. You may have noticed it. And Lyft is a wild card, man. They had terrific earnings, but the market will treat Lyft like a redheaded stepchild, if I may use that analogy, or just an oddball, because Uber is just the dominant player. So I don't know where the stock's going to go. The fundamentals are great. I think the best outcome for them is going to be being acquired. So let's talk about the Atlanta Braves. I am a baseball fan. I am a sports fan in general. And the Atlanta Braves, I believe, is the only baseball team that's publicly traded. And they don't have the fundamentals to support their stock price. I did look at them before we got on the live stream. This baseball team is worth $2.59 billion. And just their numbers are not super impressive, right? Look at the growth in revenue. Not crazy growth, just modest growth. Just coming along, 4% revenue growth. And no cash flow. So, And but I think businesses like the Atlanta Braves, right? Maybe Atlanta Brave fans are like, hey, I want to own a few shares because I'm a fan, right? I buy stuff from, like, I like the Los Angeles Angels. I buy stuff, to show that I'm a fan. I buy stuff from universities that I attended or my kids have attended. This is Long Beach State, and they have a good baseball team. So I think investors for the Atlanta Braves, I think there's an investing appetite. Like, I want to buy stock in the Braves because franchises in baseball go up over time. They may be right. And FYI, Warren Buffett, Berkshire Hathaway own stock in the Atlanta Braves, which is interesting because the fundamentals don't look all that great to me. But, who am I to say that, this investment won't work? It hasn't been working great for the 1 year, but the 5 year looks great. You doubled your money. So mission accomplished, nicely done. And you have the sense of pride of, hey, I own a piece of the Atlanta Braves. They won the World Series not too long ago. And you could have felt really good that, hey, my stock won the World Series. So that one's a fun one to cover. So Shadow Guy, Coinbase, making some noise. I like that. I love Coinbase. 5.63, nicely done, Coinbase. So Coinbase should be flourishing because there's a lot of crypto activity, and these guys make a lot of money on their brokerage platform. They're also number one in supporting brokerages that want to sell crypto that need a partner that really know what they're doing. Coinbase knows what they're doing when it comes to holding crypto assets safely, and really are the leader. Publicly traded, doing really good. Good to see the stocks up. That'll be a bright spot in my portfolio today for sure. And I did a video on Coinbase. You can get the details on my channel. But if risk is on and Bitcoin flies up, it's going to do well. So a company that announced today was Hertz, and I couldn't get the details on them. They said they were going to announce, and I think I don't have it readily available, but the reason I want to look at Hertz is I thought that Hertz was going to be in a decent spot because the tariffs were creating higher used car prices, and Hertz, just part of their business is they own cars. So the value of that asset would go up. The other big factor is that Bill Ackman bought into the company, and it caused the stock to really jump up. Now, as I covered in my super investor video on Ackman, he did make a percentage gain, a big one, but he didn't own a lot of it. So it didn't make a big impact on his portfolio. And he's still lagging most other super investors that I've covered. But it was a big splash because this is a small cap, 2 billion. And over the, literally overnight, they went from like being a $1 billion company to much larger. And now they've kind of settled down a bit, down to about $6 a share. Their stock is up a little bit today. But I think that the resolving of tariffs is actually going to hurt this stock, because if you're not going to have higher car prices, then their assets are going to not have that premium price that they thought they were going to have. So interesting to see this stock play out. We'll see if Bill Ackman does well with it. But again, it's not a big position in his portfolio. It's a small one overall. But percentage, I think, is impressive of what it's done. So the year-to-date's up 88% or so. It's a pretty good rate of return over the course of 4.5 months. So Hertz is out there. Interesting. Those were the earnings that were called out. Let's see what the heat map is telling us here. Actually, before we do that, let me hit the... Here we go. So here are sectors. These are different categories of stocks, right? Consumer discretionary up 5%. Whoa. So this is Amazon is in consumer discretionary. Like Nike is very well recognized. But I think Amazon's a big player there because Amazon's a $2 billion market cap company. It's really moving up. Technology, okay, understood. Energy, looks good. Industrials, communication services, financials, and healthcare isn't doing too bad today. Utilities are down. Consumer staples, as expected. Investors are moving away from those safe stocks and moving into higher growth, higher risk, higher return stocks. That's the day. That's what's hot today. Tomas, good to see you, man. Good to talk to you yesterday, by the way. And hopefully your stocks are thriving. So, Shadow Guy, you like Kraken? Yeah, I think Kraken's a legit company. It's a legitimate company. And I think they're going to be publicly available soon, right? They're going to issue out their shares. And when they do, I think that'll be a nice competition with Coinbase. I think right now they're good competitors. Like they make each other better because they know if they don't operate well, the other will take away share. But Coinbase is publicly traded, and I think that gives people like me greater assurance that, hey, I get to look at their financials. Okay, I'll have an account with Coinbase because I know that what I'm dealing with as a company. And when Kraken gets to that point, I think it'll make them more legitimate, and they are a strong player. Yeah, and if we're going to talk about like brokerages that do crypto, I mean, all the brokerages are going to get into crypto. They went from bad mouthing it like 4 years ago, like 5 years ago, they'd be like, crypto is nonsense, it's BS, to, yeah, we offer crypto. Come invest in crypto on our platform. And they're using partners for the most part. They might be using Kraken. I don't know if Kraken's into that. I don't know a lot about Kraken other than that they are a player in crypto, and they're a pure play crypto player like Coinbase, right? So Interactive Brokers is probably like the others that are playing in it. Robinhood really plays big into crypto. Robinhood and risky stocks and risky assets go hand in hand, and it should. Robinhood attracts the younger investor. I know there's younger investors out there on this live stream, and I would, if I was 25 to 35, I would be taking higher risks, because you do want to find a couple of investments that 10x, 20x on you, because that is going to build your wealth. You want to go from, hey, I have $100,000. I'm 25, 30 years old. I have $100,000. And you want to wake up at 50 and I have $2 million. I have $5 million. Well, you get there by having high rate of return. And so if you look at Robinhood and you look at their clientele, you have younger investors tend to go to Robinhood. Older investors go to the traditional legacy brokerage firms. The younger investor, if they're taking higher risk, that's correct. That's right. Get a higher rate of return. You're going to deal with risk, but you're still earning money. You're still probably beginning your professional career, and you're making money, and you're putting more money into the market. Imagine if you had put money, just looking at this year, right? You're making money, you're out there, working hard, and you put an extra $5,000 into the market, into some of these risky stocks on April 8th. Yeah, that's what I'm talking about. And just in short time, and a month's time, what's going on with my mouse here? In short time, that money earned 21%. That's what young investors should strive to do. Not like doing it irresponsibly or just throwing out discipline and strategy. No, your strategy is to have a higher rate of return. So when we talk about Robinhood and I think like the general media, sometimes they say stories that don't have a lot of wisdom in them. They badmouth Robinhood and say, oh, Robinhood, they get their investors to invest high risk. And I'm like, good. Yeah. If you're 30 years, I have 2 sons, 20, 25. I would tell them, take big chances. This is the time to do it. Because if you find a couple awesome investments, it'd be cool to buy a stock for $10,000 and wake up 20 years later and it's worth $250,000. Who wouldn't want that? Right? That's what I want for my kids. And that's what I want for young investors. So Robinhood's getting it done. I love Robinhood. It's one of my stocks. I believed in Robinhood when it was beaten down, left for dead. Robinhood's terrible. And I'm like, no, they have a good strategy. And it's done phenomenal. Go Robinhood. Keep doing what you're doing. What's it doing today? Up 4.79. Nicely done. All right. I'm feeling the positive vibe this market is radiating. Up 2.51 on the S&P. What's it doing year to date? We're almost back to even. We're almost even Steven on the year. We're just down 1.33. The NASDAQ, year to date, down 4%. Moving on up. Moving towards a break even for the year. And the Dow is almost breaking even. Nicely done, Dow. And not too long ago, I was looking at this market going, holy Toledo. Man, we moved down fast. And come on. So, geez, in about 2 months, we were down 24%. Whoo-hoo. I was like, that took my breath away. I'm like, man, at this rate, are we going to move down to 40% down? It's like, that's a pretty big chunk. And then very quickly, we started to see buyers come in and take advantage of those low prices. Now we're up. So, all right, NASDAQ, nicely done. Man, I love Mondays like this. It makes everything better. It makes my coffee taste better. It makes, I don't know, the birds are singing outside and I hear it a little more clearly. It's just a good day to see the market rise like this. All right, let's keep moving. Kraken, Shadow Guy, Ninja Trader. Nice. I think it's going to be Coinbase, Kraken are going to be battling it out. It's going to be good for both companies. That's good. Competition will force both companies to get better, stronger, faster, more profitable, and just really, just go after trying to be the best company they can be. So good stuff. All right, so a couple other stocks that I wanted to take a peek at. So we went over NRG, Coinbase, Hertz. So Novo Nordisk, this stock is down today. I might pick up some shares today because this stock, I mean, talk about consistency. These guys have been getting it done. A lot of green on the screen, a lot of green flags, good cash flow. They're discounted and they're down today. So I might need to buy some shares. And I might sell some shares of Pfizer because Pfizer surprised me on their last earnings. And I think Novo Nordisk is super consistent. I have other healthcare stocks that are just, doing great. Let me take a peek at a couple. Let's see. Oscar was kind of like the star of the show last week. What's it doing today? It's up 1%, but geez, man, it really cranked up last week. It went up big on its earnings announcement. It went up 30% in one day. That's part of my healthcare portfolio. I've got companies like Catalyst. And the Catalyst is my biggest money maker of my healthcare stocks. It's been doing well. It's been doing great. This has just been, look at this chart, small cap, healthcare, big profits, big cash flow. So I have these stocks, and then I have Pfizer. And Pfizer's kind of been a sick puppy. I've been trying to nurse it back to health, but just isn't getting healthy. Down 14%. Pays a big dividend, by the way. They can afford that dividend. Some people claim that they can't, but they can have their opinion. I'll have mine. And they're down 14%. I don't care how high your dividend is. They've been selling off, and I thought we were on the road. We were on the prosperous road to proving the market that you've had Pfizer wrong. We were growth, higher growth, higher growth. And then we had a contraction. And it's like, what happened, Pfizer? You surprised me. That is not good. That is not good at all. And this is why I'm thinking of selling Pfizer. I'm like, okay, there's something that isn't working right, where Novo Nordisk has just consistent revenue growth. So I'm thinking that might be the switch. Using a baseball analogy, right? I'm going to pull the left fielder out of the field and replace him with another player that's really good. I'm hoping that Novo Nordisk might be that player. I'm going to give it some thought, and that might be a move that I make today. And Mike, Novo has been a big disappointment. The healthcare has been one of those sectors that just has surprised me for a couple of years. This stock here has a weight loss drug. I showed their growth, profitability, but starting in middle of 2024, this thing is sold off. I mean, it has sold off. So I could understand a level of frustration with a sell-off of 56%, a drawdown. That's substantial. What is the market telling us? Like, what is it not like? So I think there's a lot of negative news priced into the stock, and their fundamentals kind of communicate a different story to me. But I can understand the level of frustration with a stock like this. I understand it because I own Pfizer, and I'm like, what the heck? But we'll see. That's investing is not easy. It takes a lot of homework and it takes a lot of good decisions. It takes solid risk taking, but you're not gonna hit every one of them. You know, Novo Nordisk, Pfizer have been surprises. At the same time, some other stocks have done great. So it's good to be diversified. And I think I'm still going to switch horses. We'll see how it works out. Yep. Yeah. So, Mike, I have to think that at some point, healthcare is going to pivot and it's going to do well. Because, I mean, I've invested in healthcare for 30 years. And at certain times, I loved healthcare because it was more consistent than other sectors and it had higher rates of return. And but the last 2.5 years have been bad. There's no other way to put it. Healthcare stocks have not been good. So I have to come to terms with that. All right, heat map. What's going on, stock market? All right, Amazon's still having a giant party up in Seattle, Washington, where they have their headquarters. Actually, they have multiple headquarters now, but the original one was in Seattle. And 7.34%. Nicely done. Amazon. I did a video recently where I showed that the Amazon stock is priced a little expensively if you consider their current fundamentals. They've been reducing their free cash flow because they're investing heavily in that data center. And my conclusion was, even though the stock price is priced at a premium, I'm holding my shares because it's Amazon. It's one of the 3 most powerful companies on the planet. Their e-commerce business is such a powerful entity in the United States. Their Amazon Web Services business, powerful. Number one in e-commerce, number one in public cloud. So I'm holding my shares, and I'm really glad I did so. I'll be happy to see my performance today. Meta, ditto. I've been buying Meta shares. I've been buying Google shares, and so I'm glad I was doing that. I've been buying Salesforce, buying into that. Cisco's going to announce this week, by the way. Uber, I'm big on Uber. Adobe, big on Adobe. Not as big as Google and Meta, but I'm very attracted to the valuations in software right now. The one area that is too expensive is cybersecurity, in my opinion. And I think cybersecurity could lead to some unmet expectations. And here's one thing that I would encourage you to think about with cybersecurity is, if you go back every 5 or 10 years, who were the leaders? That list constantly changes because cybersecurity is constantly adapting to the threats. And for example, CrowdStrike's super strong right now. Will they be strong in 5 years? I don't know, but I would tell you that if history repeats itself or rhymes, the answer is no, because you constantly look at the best cybersecurity company 20 years ago literally doesn't exist today. The strongest cybersecurity company 10 years ago is a laggard. It's just it just is the nature of their business. Is they're going to adapt to the threats. They're going to build their business around those threats, and then the hackers realize, oh, CrowdStrike's going to defend this type of threat, so we're going to go find a different way to try to intrude and breach companies. Well, then somebody else is going to cover that, like not CrowdStrike. And then next thing you know, that company gets hot. And it's like, oh, now it's, ABC cybersecurity. And the investors flock to that. And the market flocks to that because they're like, oh, CrowdStrike, the threats you cover are no longer the biggest threats in the business. And they move on. And these businesses tend to be, in software, it's one thing to have, like Microsoft. A lot of people use the operating system when they buy PCs. that isn't going away. People are still going to use PCs, and Microsoft has a huge cash cow in their Windows operating system, Excel, Office products, right? So those are reoccurring revenues. They've been around for 40, 50 years and will continue to be around. Cybersecurity is not like that. So just be aware. That's my observation. All right. Looks like Lam Research is super red hot today. Lam Research is doing better than Amazon. Get out of the way, Amazon. You're not the coolest stock on the stock market today. Lam Research is making it happen. Making it happen. 7.91%. Beautiful. This stock is discounted, in my opinion. I own a little bit, not a lot, but it'll still be fun to see that percentage gain. And it's actually getting close to being fair value. Let me take a peek. Yeah, we're getting close to fair value. But good day for Lam Research. Nicely done, guys. Yep. This is one of the stocks that I picked up in semiconductor. Felt that, hey, this one's going to do well. It did. And now it's beginning to get close to fair value. I'd probably own this thing, even if it was 10, 20% priced at a premium, because I think this is just going to continue to work. They're going to continue to get bigger. Qualcomm's also, this is probably old school semiconductor, my favorite semiconductor that I'm buying into. But the rock star of the group is A-Lab. These guys they're going to be like a little bit of higher risk, but boy, these guys are growing so fast. I could totally see them being acquired. I could totally see them becoming a $50 billion market cap company. This is the kind of stock that, you know, I bought this from my 25-year-old son. I manage his portfolio, and on pullbacks, I was buying into Astera because you cannot find 240% growth rates just anywhere. It's like you got to search long and hard to find this kind of growth. And what's interesting is they announced and their stock had downward volatility. I was like, guys, 200% growth. What do investors want? Like 500? It's like a huge growth stock. But then the market came to their senses and started to buy into A-Lab. I bought shares, which great about volatility is my friend. When it dips, I buy. When it dips, I buy. And I get to accumulate shares and I get to participate in the run up of a great company. You know, man, I love volatility. Whoever said volatility is a bad thing? Volatility is a great thing because it gives me a place to buy into stocks. And it just feels like, hey, man, this is great. I can't wait for the next volatile day. Can't wait for the next volatile day on A-Lab so I can buy some more shares. Now, it is getting closer to its fair value. So I'm going to slow my roll as we get this number starts getting to zero. Okay. So that'll be interesting to follow. All right. Well, I'm liking the day. NASDAQ's up 3.5%, S&P 2.6, Dow Jones 2.4. Beautiful. You sold out of your Sentinel One? Interesting. So Mike, the dividend investor guy, sold out of Sentinel One, I believe. Yeah. And how did that stock go? Yeah. Hopefully you made some money there. Look at that, 24%. It's not a bad rate of return for a couple weeks. So looks good. Looks really good. All right. All right. So one thing, I may have mentioned it, but let me mention it again. So as the market makes these big moves, right? We have a big move in equities, big move on stocks. It opens up an opportunity, believe it or not, to buy bonds. See, when you see interest, this is the interest rate on short-term bonds. The interest rate's moving up. On intermediate bonds, going from 2 to 5 years, the move is probably the most volatile. It's up 0.11, which is a big move in interest rates. And then even long term, 10-year, 20, 30. When you see interest rates go up, that means that the bond price is going down. It's being discounted. So for me, it's a very good day to buy bonds. Soon after the live stream, I'm going to go buy some bonds. I'm going to buy them through ETFs that I invest in because I want to lock in a high interest rate. Are we going to have high interest rates for the long term? My senses are that no, we're going to see lower interest rates because even though the tariff situation is getting better, I think we're still in a situation where the economy is slow. And I think the Federal Reserve will be motivated to lower interest rates, especially since the U.S. president is getting tariffs off the table. The Federal Reserve might be in a better position to lower rates to try to stimulate the economy and avoid high uninflation. High unemployment, not uninflation. I don't think uninflation is a word. So it's a good day to buy bonds. Just be aware. Not every day sets up to be a buyer in a particular asset class, but today is setting up to be a very good day to buy bonds for me. Just I'll pass that along on what I'm doing. All right. Good stream, everybody. I hadn't planned to stream today. I wanted to just, take advantage of the moment. It's a really nice moment. Stocks are flourishing today. So let's enjoy it. Good day to start, a good way to start the week. Looks like Amazon is doing great. Look at Lam Research. Nicely done, Lam Research. Is there somebody? Texas Instruments is at 9. Wow. Texas Instruments. Looks really good. Not everything's red. Telecom's down. This is safety stocks. These safety stocks were working when everything else was like selling off. People are moving here. Netflix has been getting hammered lately. And it's actually one of the stocks that I believe is highly overpriced, priced at a premium. Utilities are selling off. All the safety stocks are taking a hit today. I guess people are going to smoke less too. Tobacco's down. They're going to drink less Coca-Cola, smoke less, use less power, and not shop at Walmart as often. But they're going to use more Facebook. They're going to do more Google searches, buy more stuff on Amazon, and buy a new iPhone. All right. Cool stuff. Well, enjoy the day, everybody. And before we tune out, love for you to be a member. We had a really good member call yesterday. We went over 3 stocks that members brought to the call, and we went deep dive into them. I thought it was a really good call, and hopefully the members felt the same way. You could be a part of those. You just need to sign up. It's paid membership, and you can see those details on the homepage of my channel. Let me take you there real quick just to give you a quick tour. Not only do you go to member calls, you'll also receive access to the tools that I use to invest. And when you go here, and I think I went the wrong way, sorry. Still don't have, here it is, sorry. You just go to the join. So here's our members, and you click on the join button. Bingo, you can become a member. There's 3 different price targets or price levels. You get access to the tools that I use, and you also will receive member-only videos, which I'm going to focus more on going forward, and really deliver probably 2 to 4 videos on the market, stocks, and so forth that I hope members find valuable. And then you get invited to the Discord, interact with members, probably spend most of my time interacting with members. So it'd be great to have you join. It'd be really good. I think it'll be worth it for you. So with that, everybody, have a good day. I hope all your stocks go up, set you up really nice this week. And I'll be streaming this week a few times. I was planning on streaming tonight. I probably will still stream tonight, but we'll see. And there will be some earnings this week. Tomorrow, so today, a lot of small companies, but I think there's some bigger companies coming. Tomorrow, Sea Limited, which is in the crypto space, I think they did non-fungible tokens and other things that you can auction off on Sea Limited. JD, Chinese company. Alcon, I think they're healthcare. Tencent, interesting. And then that's tomorrow. And then Wednesday, we've got Cisco. And that's the big one on Wednesday. Thursday, we've got Walmart. Baba. Baba's been on a tear for the last 6 to 8 months. Deere, they're probably having a good day because of tariffs being resolved. Applied Materials, they're probably having a good day because Lam Research is their direct competitor, and they're doing really well today. So Take-Two Interactive, I believe they make Grand Theft Auto, and we'll see how they announce. Friday, Unilever, big consumer staple company. They do all kinds of consumables that we find in our homes. Sony. So it's still going to be an interesting week earnings-wise, but nowhere near like, especially the last 3 weeks have just been a torrid pace, man. Last week, I know there were some days where we had 400 plus earnings in one day. It's like, man, they're coming out of every direction. It was hard to keep up. Now we're going to have a couple big ones, each week. This week, I don't know what next week has in store, but until the next earnings release, it's not going to be as huge. It's going to slow down. And overall, earnings have been decent to this point. Now, the current quarter, I think, is going to be interesting. I'm glad they're resolving tariffs because I think it gives companies a solid month to recover, because I think they're really careful the first month of the quarter, which first month being April. But I think earnings have been good. I think earnings for Q2 should be good, especially if companies start to guide better. I think that could really continue the stock rally. So things are looking good on this Monday, May 12th. Let's keep it going, stock market. Let's keep it going. All right, everybody. Have a very good day and have a great week. Thanks for tuning in. I appreciate it.